Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the Canadian dollar here today, and this definitely hasn't been one of the biggest movers in recent trades. Maybe not the sexiest Forex pair on the board, but has started to pick up a little bit here this last week. And a lot of it could be correlated to the recent crude oil price action. So a really big run up and then fall in crude oil prices in recent weeks. And we'll tie that in just a second. But let's start with this US dollar CAD price action, as there was a pretty significant run up here to start February off above 135. And you'll see that for the last couple of months, that's really been the high that this market has challenged and then kind of fallen below at several points. And I mean, similar to all the major pairs, you see that dollar downside going into the end of 2023, and then a lot of US dollar upside to start 2024. But this CAD has hung in a little bit better in the grand scheme of things than an Australian dollar or a Japanese yen. And so it would be really, really interesting to see if this market not only challenges 135, but is able to climb to new highs of 136 or 137, because you see here a relatively confined range over the course of the last several months, only a few hundred pips if you're looking at that y-axis from low to high. The lows there being 132 and the highs being 138. We're smack dab in the middle, and it looks like this dollar CAD looking for one direction or another. And the nice piece of it is that those highs and lows are both only a couple hundred pips away. So looking like we might get to one of those sides sooner rather than later. And this crude oil piece could be a big part of it. You'll remember in recent years, crude oil obviously has been so volatile given the different wars that are going on globally between Russia and Ukraine and now in the Middle East, and how that has had the potential to hamper production, but has stabilized a little bit here over the course of the last handful of months, especially as the numbers of U.S. crude oil production continue to grow. But all of that aside, what we saw in recent trade was a fall from almost $80 a barrel. This market has sneakily tried to rally up to $80 or $90 over the course of the last year and has fallen from those heights. And recently here in the month of January, early part of Feb, you see another rise up to $80 a barrel and then getting cracked back down to below $75 very, very quickly. And this coincided with a pretty significant move higher in US dollar, lower in CAD here to start off February. And here we have some correlation numbers for you between Canadian dollar and crude oil prices over the course of the last decade. And you can see a couple of things. One, consistently green. Two, even with the last couple of years and all the nuance around interest rates rising in the US and Canada and all these different places globally, still seeing consistently, between a 0.25 and 0.5 positive correlation, which might not seem like a lot, but when you're talking about a commodity and a currency, cross asset class correlations, we're not talking about, a commodity and a commodity, or a stock and a stock, or Canadian dollar and Australian dollar, where maybe you'll see correlations higher than positive 0.5. This is pretty significant, one, to see the consistently positive territory in this correlation, and two, like I say, with all the interest rate speculation and how that drives demand for different currencies, still saying relatively high correlation between CAD and crude oil. And here we're going to lay them on top of each other to show you practically what some of this price action looks like. And now keep in mind that the popular version of Canadian dollar, US dollar here is priced US dollar first. And so you're looking at a little bit of inverse, but you can see, for example, if you look near the center to right section of this chart, a great example of that inverse correlation where crude oil was rallying throughout September and into October, and US dollar CAD was moving lower, and then crude oil started to fall over the course of October and November, and dollar CAD started to rise in that period. Again, a positive 0.3, 0.4, 0.5 correlation doesn't mean that they're always moving in that same direction, Canadian dollar and crude oil, but in the grand scheme of things, they will tend to trend in the same direction. And recently, you're seeing that black line there in crude oil get cracked lower over the course of the last couple of weeks. And likely no coincidence that dollar has been rising in that same time frame. So continue to watch some of the crude oil price action and see how it affects Canadian dollar. Again, crude oil prices higher tend to be good for that Canadian dollar. Crude oil prices lower tend to be good for that USD versus the CAD. Bad for Canadian dollar in that sense. But let's take a look at where traders are currently positioned, as we've got 56% of IG clients with open positions in this forex pair, currently short that US dollar, long CAD. So maybe a little bit of selling going into this run up in USD, a little bit of a contrarian play here around 135. We'll see if that 135 level holds and we see another reversion lower in USD, or if this market wants to challenge 36, 37 and onto those highs near 38. Obviously, crude oil has so much room to run in either direction. $70 to $75 a barrel is really historically average prices, but in recent history, we've seen triple digits crude, and we've seen 60 handle crude. We saw a couple of months ago crude oil prices get down to $65, $68 a barrel. So anything on the table for crude oil, and of course, anything on the table for this dollar CAD market, definitely an interesting one here to start 2024.